causing a certain level of, there's always going to be a certain level of inventory. But I think that I think it really starts to loosen up as we look ahead into 24. I think when the rates start to, as the Fed starts to message that they've done their work in terms of getting inflation under control, and you know this as well, and they start to message that they don't have to continue raising rates and even start to lower rates, and they may not come until early 24 or late 23. I think as soon as that starts happening, the mortgage rates will start to respond to that. We'll see them start to pull back. And then I think there'll be a lot of pent up supply and demand, right? I think there'll be a lot of would-be sellers that want to move on with their lives, and they haven't had to move in 23, but now they want to buy that smaller house or the bigger house, or move to a different state and, retire into a different home. And so I think that's when we really start to see things accelerate. But I think we got to kind of trudge through 23 to get there first.
So here's the question is, do you think that those people are going to sell, or are they going to pull equity out through other investment vehicles? I mean, one of our investors just came out with something that's new to me, and I've been doing this for 100 years, a second mortgage, reverse second mortgage. So you have that 3% first or 2.5% first, but I want to get some of that equity out. If I'm old enough, I can get a reverse mortgage. Yes, I'm old enough. You can take a reverse second, not have a payment on it, but I can go and buy another piece of property, but at least I can tap into that equity. Do you think people will try and find ways of tapping into equity because they don't want to give up that low cost first?
Personally, I think that's those options have always kind of been out there. There's always been investment vehicles where people can pull in to tap into equity. I think on a big scale, I find that a lot of people don't know about those different opportunities investment wise. And so unless the agent community or the lending community is doing a really big push and really good at articulating those different options, I think you'll always have a certain number of takers that want to tap into their equity, don't sell the property, maybe keep it for financial reasons, but also want to move on and buy something else. I don't see that being a big portion of the market. And I could be totally wrong. That's just my personal opinion, because I think that a lot of the typical consumer that's buying and selling homes, they start to think that that's risky, or they think that that's
good point.
They think that that's sort of the stuff that got us in trouble during the Great Recession, even though those are really good investment vehicles. I think you have to have a really savvy buyer seller to want to take advantage of something like that. And I think that the delivery of that message has to be really it has to be really strong and compelling, and the person delivering it has to really know what they're talking about.
So based on what you're saying, then 24 might be another one of those really challenging times, because the sellers were getting a pent up seller demand. And obviously those sellers, for the most part, want to have a roof over their head. Some of them might want to tent
somewhere,
right? Yeah. So they've got to buy something. So that's going to cause demand. Plus, we've got that 1.9 million household formations is causing demand. So that could really be a big push. If you get a lot of demand and not a lot of supply, that means prices are going to skyrocket again.
That's why I think this year, again, if you're a buyer out there looking to do something, I think 2023 is the time to do it. I know the rates are higher than they were a year and a half ago, and people don't like that. But if you accept the notion that you're buying the home and not the loan, and that rates will probably come back down to somewhere in the 4s in the next year or two, and that you'll refinance, right now is the time to be buying, because you're not competing against 15 different offers. There is some inventory, not a lot, but I think people can have some negotiating terms as a buyer. And then I believe that, because I do think that in 24, we'll see more volume, we'll see more inventory, we'll see more transactions take place across our industry in real estate. But I think that you're going to see the demand return in a way that does start to put maybe materially upward pressure on prices. I don't think we're seeing that upward pressure on prices right now. And I don't think we're going to see that for the next 6 to 9 months, is just my personal prediction, just based on rates and the noise that's out there in the media. But I think once you kind of get past this period that we're in now, I think you're going to see a lot of potential price appreciation pressure.